Okay, great.
Push that in.
Welcome everyone to the Committee on Taxation. We're going to get started with our meeting this morning. Just a brief announcement, technology announcement. For those of us in the room, please mute your speakers on your devices. And when you need to speak, please use the regular microphone as you would under normal circumstances. For those who are at home, please mute your microphones if you could on your devices. And we will begin with introductions. I guess we'll start with Representative Matlack.
Good morning. I'm Ann Matlack. I represent District 92, which includes the communities of Cushing, South Thomaston, St. George, Matinicus, Creehaven, and the Muscle Ridge Islands.
Good morning. I'm Representative Mo Terry. I represent District 26, the west side of Gorham.
Don?
Good morning. I'm Don Moran from Hollis. I represent Hollis, Buxton, and a little bit of Saco.
Good morning, I'm Kristen Cloutier. I represent House District 60, which is part of Lewiston.
Good morning, I'm Steve Stanley, representing District 143, East Morlock and Millinock and Midway, Patton, a small part of the unorganized territory.
My name is Ryan Tipping. I represent House District 123, most of the wonderful town of Orono, and I serve as House Chair.
I'm Senator Ben Chipman. I represent Senate District 27, which is part of the city of Portland, and serve as Senate Chair of the committee. I know we have some members who are also joining us on Zoom. If they'd like to introduce themselves, we could start with maybe Senator Pouliot.
Good morning, State Senator Matt Pouliot. I represent Senate District 15, Augusta, China, Oakland, Sydney, and Vassalboro. It's great to see you all.
Representative Krajicek.
Good morning. Good morning. I'm Representative Ted Krajicek. I represent Acton, Lebanon, and part of Shapley, District 20. And I apologize for not being there, but my business actually started back to work on July 6th.
Do we have any other members joining us? Senator Sanborn, are you with us?
I am. Good morning, Heather Sanborn. I represent Senate District 28, which is half of Portland and part of Westbrook.
So I guess that's everybody who's on Zoom at this point. Okay, great. So I guess with introductions, we will now move to the next item on our agenda, which is a presentation by the Department of Administrative and Financial Services and Maine Revenue Services on suggested changes related to tax conformity with the Internal Revenue Code. I believe that Mr. D'Alessandro is here to present for DAFS. If you'd like to begin.
Senator Chipman, Representative Tipping, and members of the Taxation Committee. Good morning. My name is Daniel D'Alessandro. I'm a staff attorney for the Office of Tax Policy at Maine Revenue Services. I'm here today at the request of the administration to brief the committee on recent COVID-19 related changes to the Internal Revenue Code and present the administration's proposal with regard to conforming to those changes through an amendment to LD 2010. LD 2010, commonly known as the Conformity Bill, is submitted annually by the Department of Administrative and Financial Services to update the references to the United States Internal Revenue Code in Title 36. Maine's conformity to the Internal Revenue Code primarily affects the state's income tax laws, which are substantially based on the code. The Maine legislature must annually review amendments to the code since the last conformity date to determine whether it wants to conform to some or all of the federal changes that impact Maine's tax laws. In addition to those amendments that must be reviewed annually and where conformity requires an affirmative action of the legislature has also enacted a limited number of provisions where the state automatically conforms to amendments without the need for additional legislation. This so-called rolling conformity is the exception and limited by the Maine Constitution's prohibition against surrendering the power of taxation. LD 2010 was proposed in the 129th second session and has been carried over on the special appropriations table. Meanwhile, the changes proposed in LD 2010 have been enacted as part of the supplemental budget. These changes included updating the IRC conformity date to December 31st, 2019. The administration is now proposing to amend LD 2010 to further update the conformity date to June 30th, 2020, and enact income tax modifications to decouple from some of the temporary federal changes. The amended LD 2010 would be emergency legislation and apply retroactively to tax years beginning on or after January 1st, 2018, and to any prior tax years as specifically provided by the code. Since the conformity date of December 31st, 2019, the federal government has enacted 2 coronavirus relief laws that contain federal tax provisions with immediate Maine income tax implications, and is considering enacting additional legislation. Many of the federal changes are designed to get liquidity in the hands of taxpayers by providing temporary tax cuts. The federal government is well suited to stimulate the economy and bolster employment in this way because of its ability to borrow. However, states with a balanced budget requirement, like Maine, don't have the same capacity. The administration's proposal is designed to avoid raising taxes and to provide tax stability while conforming to those federal changes that will have the greatest impact on the state of Maine. To assist you in your review, we have provided an Office of Tax Policy report dated May 7th that lists the most notable federal tax law changes, including a breakout of their revenue impact, and an update to that report dated July 24th, detailing the administration's proposal. I can go through those reports now, and I would be happy to answer any questions you have. If you turn to the, oh, go ahead.
Representative Tipping.
Thank you, Mr. Chair. So just to set this up for the committee and whoever's watching, just to make sure it's perfectly clear. The presentation that we're seeing today, the language that we've been given, and the memo that came before that language is going to be an amendment to the existing bill that's currently on the table. It's actually a similar process to how it was a few years back when we had a special session and needed to pass a conformity bill in that special session. And it's really our only vehicle to do it soon that's in front of us. Apparently we can't seek a new bill from the revisor's office without a session being called. So that's where we are. And just to clarify why we're taking the route that we're taking by amending an existing bill.
Great, thank you, Representative Tipping. Mr. D'Alessandro, if you'd like to continue, that'd be great.
Okay. If you turn to the July 24th update, the second page lists all of the items, and so I'll go through those. If we want to take the item number 7 first, that's the forgiveness of the Paycheck Protection Program loans. That's an important part of this bill and of the federal coronavirus relief efforts. Under federal law, there are Paycheck Protection Program loans that are going out to businesses all over the country, including Maine businesses, and a large portion of those loans will be forgiven. Normally, when a loan is forgiven, that is counted as income, cancellation of debt income, under federal law and state law. But for these particular loans, the PPP loans, there's a federal provision that exempts them from taxation, right? That is not cancellation of debt income. At the same time, the Internal Revenue Services has issued guidance saying that expenses that are paid for from those forgiven loans don't qualify for deduction. Normally they would. Maine Revenue Services, operating under our current December 2019 conformity date, has issued guidance where we are not following that yet because we don't have a conformity bill that's been enacted yet. And so the treatment under state law is the opposite. Those forgiven loans may be part of income, they may be cancellation of debt income, but we're allowing the deductions that are paid for from those loans. And that doesn't exactly cancel out, but it provides relatively similar final tax treatment to what is happening under the code. But it's a more complicated way of getting there, and there will be some taxpayers that arrive at different results. And so the administration is proposing to conform to the federal treatment of the forgiveness of Paycheck Protection Program loans. And that'll affect tax years 2019 and 20. That would be fiscal year filers for 2019 and generally in 2020. If we then move to the top of that list, I can just take them in order from there. We're going to cover a few items that were part of the Tax Cuts and Jobs Act. And the general theme here is the Tax Cut and Jobs Act provided limits on what could be deductible or when you could take credits. And the CARES Act has suspended those limits for the purposes of getting liquidity into the hands of taxpayers. And these are generally retroactive provisions. The first one is the limit on non-corporate losses. Under the Tax Cuts and Jobs Act, a business couldn't deduct a loss above $500,000 for a married filing jointly taxpayer. That would mean if they had a business loss greater than $500,000, they couldn't use that to offset their other current year income. For instance, if they had $1 million of wages and $1 million of business losses, they couldn't use all of that $1 million business loss. And then what they couldn't use would be carry forward to future years. So they eventually would get the benefit of that loss, but not in the first year. The CARES Act suspended that limit for 2018, 19, and 20. And the administration is proposing not to conform to that suspension. Conforming to the suspension would have a revenue impact of approximately $20 million in the first fiscal year. The second item here is the interest deduction cap. Under the Tax Cuts and Jobs Act, businesses are not allowed to take an interest deduction beyond 30% of their adjusted taxable income. This limit is being adjusted in the CARES Act to 50%, along with some changes in how it's computed. So it's generally allowing more interest to be deducted. Under the Tax Cuts and Jobs Act, when interest deductions were denied, they could be carried forward and taken in future years. The administration is proposing not to conform to this interest deduction cap increase. Conforming to it would cost approximately $8 million in the first year. The third item here is qualified improvement property. This has been seen in the press as the retail glitch. Under the Tax Cuts and Jobs Act, there was what was considered a drafting error, and the qualified improvement property, this is retail property, was considered 39-year property for depreciation purposes instead of 15-year property, which meant it wasn't eligible for bonus depreciation. The CARES Act fixes this drafting error and is retroactive to the date of the CARES Act to 2018. And the administration is proposing to conform to this change in the depreciation schedules. Now, as you know, Maine doesn't conform to bonus depreciation, but has the Maine capital investment credit instead. And the administration is proposing that this property would qualify for the Maine capital investment credit going forward for property placed in service in 2020 and later, but not retroactively.
Mr. Chair,
Yes,
I have a question.
go ahead.
This is Representative Ted Kryzak. If we could go back to the losses. Under Part C, losses cannot be deducted until 2023. My business has been shut down since March. I need to deduct those losses in the next tax year, not in 2023. My plan is to have my business back up and running in 2023. So why are we not conforming to the federal government on that one? Thank you.
So this is the interest deduction limits.
All the Part C losses are not deductible until 2023. If under the federal, we can deduct them now.
1 second, please. All right, so this is the interest deduction cap. And so if you have an interest expense above 30% of your adjusted taxable income, at the federal level, you'll be able to deduct that. But under this proposal at the state level, you won't be able to deduct that in the first year, in the year of the loss. The federal treatment here would have been to carry it forward every year and to, again, check whether you were above or below that interest to deduction limit. And that is a relatively complicated way of approaching this interest deduction. Under this proposal, you'll be able to deduct that interest as long as you have the carry forward of that interest, as long as you have any main taxable income to offset. And we won't look whether the interest deduction, whether you are over or below the interest deduction limit. That will allow Maine state businesses to deduct that interest in a simpler method and in a quicker method. But as you've noted, that is put off to 2023. And really what we're looking for is a way to provide that access to that interest deduction as simply and as quickly as possible. And as conforming to that is $8 million. And that's $8 million that is hard to pay for right now. And so what we're looking for is a way to do this without raising anybody's taxes. And that's why it's put off to 2023. But eventually, businesses that have their interest deduction limited will get access to that interest.
Mr. Chair, if I may.
Yes, go ahead.
I'm talking about excess losses under section C1 and C2. It seems to me that to help our businesses, we should be allowing them everything that the federal government is allowing them. And I just don't understand why we're picking and choosing through this and deciding that, yes, we're going to leave our tax base the way it is now. And we're okay with this federal idea, but we're going to make up our own ideas on this, particularly in this.
Well, I think one of our primary goals here was not to raise taxes for anyone. And so the state, unlike the federal government, can't pay for these tax cuts through borrowing. And so if a tax advantage is going to be offered, it needs to be offset somewhere else through raising taxes here or cutting spending elsewhere. And this proposal tries to limit both of those as much as possible while selecting the federal changes that will have the greatest impact on Maine.
Thank you.
I have a quick question.
Yes, go ahead, Senator Pouliot.
Mr. D'Alessandro, would it be possible, if this has already been emailed out, I am missing a copy of it, but if you could send along a copy of your remarks, that would be very helpful.
Yes, we can do that.
Seeing no other questions at this time, if you could continue, that'd be great.
Yeah. The next one is number 4, the charitable contribution limit. Under the Tax Cuts and Jobs Act, individuals and corporations were limited based on a percentage of their income for how much charitable contributions they could make and get a deduction for. And if they made excess contributions, those were carried forward to future years. The CARES Act suspends that limit. We're proposing to conform to that CARES Act change for individuals, and we're proposing to conform for corporations going forward for 2020, but not for 2019. The next one is also net operating losses is also a Tax Cuts and Jobs Act item. Under federal law, there was a limit. There is a limit on the amount of NOLs that can be used to offset current income, past NOLs that can be used to offset current income, and it's limited to 80% of taxable income. Maine never conformed to that federal limit. And the CARES Act is now suspending that limit for tax years 2018, 19, and 20, really putting the federal government in conformity to where Maine already was. The administration is proposing to conform with the federal government. We're already basically in conformity for those tax years, and then to conform to the NOL limit going forward. That would be for 2021 and onward, we would be in conformity with the federal limit. The federal government has also allowed for the carryback of NOLs, and that's something that Maine has already decoupled from. Maine hasn't been in conformity with NOL carrybacks for maybe approximately a decade. And the administration isn't proposing any changes there. If somebody carries back an NOL at the federal level, they then receive a subtraction modification at the state level, allowing them to carry it forward instead. Now, the next item is the credit for paid sick and family leave. This federal credits don't have direct state conformity application. We don't know, the state doesn't automatically conform to federal credits, though we do have some credits that are based on federal credits. But as part of that federal credit, there's a denial of double benefit provision. And what that does is, if you use the federal credit to pay for deductible business expenses, you don't receive a federal deduction. And that's on kind of a basic tax law principle that if somebody else is paying for the expense, you don't get the deduction. And in this case, it's the federal government providing the companies with non-taxable income, these credits, and then denying a deduction for it. And you see that relatively commonly in federal law. And that's happening for the credit for paid sick and family leave and in the employee retentions credit. And we're proposing to conform to both of those federal changes. As I said before, we're also proposing to conform to the federal treatment of the Paycheck Protection Program loans. This is listed as a potential item here, and I want to highlight that for you because both the Senate proposal and the House proposal are proposing changes to the Paycheck Protection Program loans. And so there may be future legislation on this point, and we may have to come back to you on this one.
Representative Tippin.
So for number 6 and number 8, the two credit denial of double benefit pieces, you predict modest revenue loss?
Right, and this is really a baseline question that maybe Dr. Allen can go into more, but because of the timing, we had the federal change first, and then the revenue forecast just came out yesterday. And that took into effect the federal changes, but not conforming to them because we haven't conformed to them yet. And so we're looking at a modest revenue loss for those conforming to those. I would note that these are all preliminary revenue estimates.
Yes, Dr. Allen, do you have something?
Thank you. No, just to reiterate what Daniel just said. So all these estimates were done prior to the revenue forecast that was completed yesterday. So we're going to now have to go back and revisit these. We don't think they're going to change significantly, but some of them will. You may see some tweaking in those fiscal notes because we are now working off a new baseline that obviously has tried to take into account all the impact of the pandemic on the Maine economy and on state revenues.
Great, thank you for that. Representative Tippin.
Right, I understand tweaking the numbers, but if you're denying a double benefit, how would that result in revenue loss?
I think I'm going to have to get back to you on that one. we can get clarification to you through Julie on exactly why that results in a revenue loss at the state level.
Senator Sanborn, do you have a question?
I do, thanks. So I am curious about the tax treatment of SBA payments on behalf of borrowers under direct payments to the lenders that was in section 1112 of the CARES Act. I'm unclear on the federal tax treatment of it, and I'm also unclear on the state tax treatment, but it will impact probably almost as many borrowers in the state of Maine as the PPP loans. And there's no offsetting business expense that can be directly tied to those loans because these are just payments for both principal and interest that are made directly to the bank on behalf of all borrowers who have SBA backed loans for the next 6 months or for 6 months from the date of the CARES Act.
We're not proposing any deviation from the federal change, but I can look into what the federal treatment of those will be and get you that information.
Yeah, thank you. I think there's some confusion out there on what the federal treatment is and whether that is income to the business or considered forgiveness of indebtedness income for the principal portion of the payment. Obviously, the interest portion presumably offsets, but the principal portion I'm completely unclear on and haven't been able to find an answer.
Okay, we'll look into that and get back to you. The next one is a charitable contribution above the line deduction. The CARES Act provides a $300 charitable contribution for contributions made in 2020 as an above the line deduction available to everyone. And we are proposing to conform to that. The next one is changes to the qualified retirement accounts, and there are a few changes there. Taxpayers are allowed to take a distribution from their retirement accounts and then spread that income over up to 3 years, and then even recontribute the amount and not pay any taxes on it. And we are proposing to conform to all of those changes. And that's one that would be extremely difficult to decouple from. We normally aren't looking at how people are using their retirement distributions or when they recontribute them. We just follow federal law on that. And to have somebody have income or have money that was in a retirement account that was treated differently for state purposes than it was for federal purposes would require a great deal of record keeping on the taxpayer's part and be very difficult on Maine Revenue Services part to enforce. The next item is the exclusion of employer student loan payments. An employer may pay up to $5,250 toward an employee's student loans, and that those payments are excluded from the employee's income. Normally, if an employer paid for their employee's student loans, that would be income to the employee, but here it's being excluded. Maine already has a similar provision if it's an educational opportunity tax credit eligible loan, then the payments are already excluded, but this would be broader than what Maine has. And we're proposing to conform to that as well. There is an expansion of HSA and FSA qualified expenses that we are also proposing to conform to. And this is another one that would be extremely difficult to decouple from. Maine Revenue Services is not in the business of looking at how HSA's expenses are made. We don't have any different qualifying expenses. And so having somebody make a disbursement or a payment from their HSA at the federal and have one tax treatment at the federal level and a different at the state, again, would be burdensome on the taxpayer and difficult for Maine Revenue Services. And finally, there's an expansion of telehealth, and that's for HSAs and for qualified health insurance plans. And we're proposing to conform to that as well. And as you can see, the total cost for this proposal is 7,370,000 in the first year, and then dropping to 3 and 4 million. These are preliminary numbers, and we'll be turning to them again now that the revenue forecast has been released.
Great. Thank you, Mr. D'Alessandro. Any questions from the committee? Representative Tipping had his hand up.
Thank you, Mr. Chair. And thank you for running us through this, Mr. D'Alessandro. Going back to number 9, the charitable contribution above the line deduction, what is the perceived benefit to the state for spending that $2.7 million?
Well, I think that this is a provision that will get not a lot of money, but we'll get some money into the hands of basically every taxpayer in the state. And that's good for supporting an economy that's in trouble.
Additional questions from members of the committee? Representative Marine.
Thank you, Mr. Chair. Mr. D'Alessandro, could you run over and explain number 10 again, please?
Yes, I can. So at the federal level, and this is something that's happened at the federal level for various different disasters. Usually we're talking about wildfires or hurricanes, but this is a trick that the federal government often pulls out for federal disasters. And what they do is they let taxpayers take money out of their retirement accounts early. And when you do that, and they waive any penalties for doing that, and then they let you recontribute the money within a certain number of years. In this case, within 3 years. And so if you take the money out now to pay for COVID-19 related expenses, and then you put it back in any time in the next 3 years, you won't have to pay tax on that distribution. What they've also done is they've let you spread the tax out over 3 years. And so you take that early distribution now, instead of being taxed on it all in 2020, you'll be taxed on in 2020, 21, and 22. And so that just, yeah.
You're good? Okay. Any additional questions from members of the committee, either here or by way of Zoom? Don't see any hands up from anybody. So I guess we can move on to discussion by the committee about the presentation, and folks have thoughts about that.
So I have a question.
Sure, go ahead, Senator Pouliot.
So I think really the big discussion right now is, whether the legislature comes back into session or not. And, I think it's important for us to certainly address this issue, but Mr. D'Alessandro, could you speak to just a little bit more again about why it's important to do this now versus waiting until January?
Right, yes, I can. So we have at both the federal and the state level, the filing date for 2019 taxes was postponed until July 15th, but that date has already passed. So taxpayers, most have already filed their tax returns, and those who are filing on extension are still filing them right now. And a lot of these provisions are retroactive to 2019, and taxpayers filing now won't be able to take advantage of any of these changes if we don't conform soon. And if we wait until 2020, that will force taxpayers to file now under one code, and then if they want to amend later on. That's difficult for both the state and for taxpayers. If we conform more quickly, then taxpayers can take an extension and then file their 2019 returns. Many of these provisions are also retroactive to 2018, and so until the legislature acts, taxpayers who are amending their federal returns to take advantage of the CARES Act changes won't know what the federal or what the state treatment will be until we pass a bill. And they may want to take different steps at the federal level or at the state level based on how the legislature acts. And so having some idea of what the legislature is going to do as soon as possible is a benefit for taxpayers and for the state. For 2020, we are in the process of developing 2020 forms, and those need to go out to the various software vendors this fall. And with this number of changes, we would really be in limbo in that form development, both the software vendors, taxpayers, and the state. And we would be forced to develop forms under current law. And if the legislature were to come in early in the 130th and pass an emergency bill, taxpayers and the state would really scramble to update forms and to have a smooth filing season. And so if we can have a conformity bill now, we can develop forms based on that conformity bill, and the whole filing season is going to go smoother.
So, Mr. D'Alessandro, so I guess what I'm getting from this is, long story short, we need to take action now so that if or when there is a special session, this can be enacted in time for computer software that prepares taxes to be updated in time for that work to begin in January?
Well, the filing, right, will begin in January, but the work on the forms is now.
Right.
It will be going out in the fall.
Right.
Right. Yes, that's correct.
I have a follow-up.
Sure, go ahead, Senator Pouliot.
Thanks. So I'm just trying to think in terms of historically when feds have made changes. It seems to me the last time there was a significant change made was TCJA in 2017, and then we had a lot of updates to do with conformity. Can you recall a time when the federal government made a change mid-year like this, after the legislature had adjourned or so forth, and how the legislature dealt with that?
So I don't think that's really happened recently. Usually their perspective changes. We've had extenders, right? There are items that expire every year, and there are extenders that often happen late in the year, and then the state has to conform early in the legislative session. But those are usually relatively minor. I think the Tax Cuts and Jobs Act is a good example. Those changes came in December, and many of those were applied to that whole tax year. And then the state wasn't able to come into conformity until the following, I believe, September. And that really left a long period of uncertainty for the state.
Thank you.
Can I ask a question?
Sure, go ahead, Senator Sanborn.
Thanks, Senator Schuman. So I assume I know the answer to this, and it may be a question for Julie, but constitutionally, is the governor permitted to order conformity under her emergency powers, or is the legislature required to act?
To change the conformity date would require legislative action.
Any additional discussion from members of the committee?
One more, sorry.
Sure, go ahead, Senator.
Mr. D'Alessandro, when you and I spoke like a week and a half ago, the numbers that you had given me were quite a bit more substantial than those being projected here. Is that just because of the new revenue forecast and why it's gone down? I mean, I think the numbers we were talking were closer to 30 or 40 million to conform.
The primary difference there is the previous numbers are full conformity to all the federal changes. And the numbers you see here are just conforming to the proposed changes.
Got it. I think that is definitely something for us to consider as well. Obviously that would be a big fiscal note to do full conformity, but I have concerns about not fully conforming if we're really looking to make sure that these changes don't get passed on to the main taxpayers. Then we really need full conformity.
Representative Tippin.
So we've talked a lot in this committee about trying to pay for the things that we passed out of the committee. To do full conformity, I mean, like you said, we're in the neighborhood of tens of millions more than this. Given the information we just received yesterday from the update to the revenue forecast. I mean, I can see the value in choosing the pieces that will have the biggest impact on Maine taxpayers, rather than trying to, you know, find ways to pay for a massive bill that came out of this committee. I think one of the things that kind of binds our hands on this is, unlike other committees that may be looking at projects to help people in this time, as I understand it, the one thing that the COVID relief funds that went to the state cannot be used for is loss of revenue. So basically anything we do in this committee to help people, this is the one place where that bundle of funds can't be used. Is that correct, Mr. D'Alessandro?
So there certainly would be problems under current law of using those funds. I don't know that I have a final answer on that, but there certainly hasn't been federal guidance that would say that we could use it in that way. But the thing to note is that there's both a House and a Senate proposal that change the way the funds can be used, and we haven't seen a final bill come out of the federal government, but that could change how what federal money is available.
Would it be possible to get this conformity revenue estimate by item proposal dated July 24th, 2020, with all of the figures on it, so we could see, you know, what we're talking about here? I know I had written it down when I talked to you, but can't for the life of me find it. I'd be interested in seeing, you know, what we're talking about here for figures.
Yes, the May 7th report has those numbers for the full conformity.
Okay, great, thank you.
Mr. Chair.
Sure, go ahead.
Thank you. Yeah, I want to say that I think that MRS has struck a good balance here between, for example, ensuring that all the PPP loans will be treated the same way as the federal government, but not allowing some of the immediate deductions that are primarily going to very large businesses or very wealthy individuals. So the $20 million price tag on the modification on the limit for non-corporate losses seems like a very appropriate item to leave on the table, because those non-corporate losses are not flowing to our mom and pop businesses across the state of Maine. They are, they're, you know, at a very different level, I think, in terms of who those taxpayers are and where those benefits would flow. And it also is something that's simply going to be carried forward. So those taxpayers are still going to get the benefit of those losses, but just in the out years instead of conforming to the immediate deduction of those, if I understand correctly, Mr. D'Alessandro.
Right, that's correct. And that's true for all of the big decoupling here, the non-corporate losses, the interest deduction, and even the charitable contributions. The deductions that are denied here can be carried forward and used in future years.
Mr. Chair.
Sure, go ahead, Senator Pulliam.
So a couple of things about that, though. I mean, it's great to carry forward deductions, but it doesn't provide cash flow for the business to help keep people employed. So, I mean, if we're really talking about, I mean, I think it's important. I wish we could distinguish big, rich, wealthy people from businesses that are actually providing jobs for Maine people and helping them stay going forward, so those people get paychecks and all these things, you know. So I want to just be very aware of the fact that you know, in many cases, those are Maine businesses that are going to then struggle to make payroll and make sure that they can keep a full group of employees, you know, on board. And the other thing that's missing here as well, as best I can tell, and maybe I'm missing it somewhere, is the RMD piece, the required minimum distributions. I mean, those are people that are taking money out of retirement accounts, that's a pretty big number that seems to be missing from the July report.
Yes, Mr. Allen.
So we don't view that as a conformity item. That's a change at the federal level that is going to result in certain taxpayer behavior. And we took that into account in the revenue forecast yesterday. So that's been captured. It's in the new forecast, but it's not a conformity item. There's nothing for the legislature to conform or decouple from.
Okay, great. Thank you.
Mr. Chair.
Yes, go ahead.
Thank you. So perhaps Mr. Allen or Mr. D'Alessandro can talk a little bit more, but the $500,000 limitation on non-corporate losses, I'm trying to, again, kind of figure out what the scenario there is in my head, where a main business has a non-corporate loss of in excess of $500,000. I think this is actually a provision that's primarily used by wealthy taxpayers who have investments that they're offsetting against wages. But can you help me understand that?
Well, so this is a provision that only impacts a fairly limited number of taxpayers. You need income to offset above 500,000. It could be wage, it could be investment income, but you need quite a bit of taxable income to offset. And then you need quite a bit of losses. You need, if you're a married couple, which most people using this provision will be, the loss needs to be above 500,000. And you're right, there are not a lot of main businesses that will have both a loss of 500,000 and other income above that. This is going to be a limited number of taxpayers total and a limited number of what might be considered main businesses. But there could be multi-state businesses that would fall under that.
Is there a way to parse out businesses from individuals with this benefit?
So this is a business, it would be an individual taxpayer with owning a pass-through business. So it's both. They will have non-business income that they're offsetting with probably a pass-through or an S-corp business loss. And then any deduction that's denied here can be carried forward and used in a future year. If you compare that to the second one, the interest deduction, that would be one that would apply to a larger population of businesses.
Any additional discussion by the committee? Seeing none, are we? Go ahead,
Mr.
Senator
Chair,
Lewis.
sorry. Is there interest from the committee about addressing the interest deduction cap? I mean, I think in hearing this explanation from Mr. D'Alessandro and getting to the sentiment that I shared earlier, I'd be fine with us not pursuing the non-corporate loss piece. I'm more interested in main businesses having the cash to pay their employees, frankly, right now. What about this interest deduction cap on 50% of income? I guess maybe a lot of that probably is passed through being, individual filers, but in what cases could that be, an S or C corp that would be losing, revenue because of that?
That would be both individual and corporate filers, individuals through S corps and pass-throughs and C corps. I don't have the breakdown here of what's on the corporate and what's on the individual side, but it'll be both.
Mr. Chair.
Yes, go ahead, Senator Sanborn.
From a small business perspective, much of the interest burden on small businesses in 2020 has been relieved and paid for by the federal government, by the SBA, through the subsidies that I talked about earlier in Section 1112 of the CARES Act. So small businesses in Maine, which is a very, very broad definition, that have SBA-backed loans, are not paying interest on any of their loans at this time. And a number of businesses are also receiving other kinds of relief. And so many businesses that are impacted by this are actually obtaining relief for their interest expenses this year in some other way. And the businesses, I think, that are not are likely, again, in that echelon of businesses that are not actually at risk of laying people off or failing, but for whom this would be potentially a windfall.
Mm-hmm. Seeing no other committee discussion, I think this strikes a good balance myself. I think it minimizes negative impact on Maine residents and will help a lot of people. I've heard, as many other committee members probably have, from accountants and folks that this is going to impact in terms of how taxes are prepared, that they want something to be done. But I do think we need to do something, and I think this strikes a good balance, minimizing the impact on our state budget as well, which we know isn't in great shape right now. So I think this is a decent proposal that I can support.
Mr. Chair.
Yes, Senator Pouliot.
So like in normal committee meetings, are we going to be able to have the public weigh in on this at all? Or are we just going to make a decision amongst ourselves? I mean, we did get a couple of reports from NFIB, and the accountants are the two that I saw, but no real response to the presentation given by Mr. D'Alessandro today. And normally, you know, in a committee amendment proceeding, there would be, you know, an opportunity for the public to really to share their opinions on what's being presented here.
Senator Representative Tipping.
Thank you, Mr. Chair. I mean, that's a great point, Senator Pouliot. I think we're not, you know, looking to take action on this today. I think the committee can definitely accept written comment, or you know, people want to send videos, they can. But we can accept comments up until there is a session and there is an actual amendment being presented. But whereas this isn't a product that we're voting out today, you know, I think we wanted to hear the presentation, make sure the presentation was completely public, and allow people to digest this information and then provide comments either to the tax committee or their own legislators.
That sounds great. Yeah, I knew we weren't voting today, but I just wanted to make sure there'd be an opportunity somehow for this information to be disseminated in a kind of easily accessible way, so that people can then provide comments as to this updated version provided July 24th. That would be great.
Right now, all this information, I believe, is posted on the resources tab under the tax committee. I see Julie nodding. And if anyone ever has questions about getting their hands on this information, they can contact Julie Jones, who I don't think we introduced because she's not in the room, but our amazing analyst, Julie Jones, right here next door.
Thank you. It's a good point, Representative Tipping. Yeah, so I mean, it's my understanding this would be an amendment to a bill that's already pending. I'm sorry. Oh, Julie, do you have something to add?
Yes, I just wanted to mention that also on the Taxation Committee web page, listed under Taxation Committee materials, so it's accessible from the website by going to the Taxation Committee page, is as Representative Tipping mentioned, the DAF's materials that you have in front of you today, but there's also a link which the LIT people put together for us, which is an analog of the link that's available for the public to submit testimony on an LD. Because this is not an LD that you're holding a public hearing on, we had to do it a little bit differently, but there is a link there that members of the public can use to submit comments in the same way about this proposal, in the same way that they could submit testimony with regard to an LD. I don't know how broadly known that availability will be. It's hard to sort of tell the world in general that that's there, but it is there. Just wanted to mention that.
Great, thank you, Julie, appreciate that.
Mr. Chair,
Sure, Senator Pouliot.
when I click on that link in the agenda that was provided to us for the comments, it just says the site can't be reached. It's kind of like calling Maine Department of Labor.
I checked it probably yesterday and it was working, but we'll look into it and make sure that it will work.
Thank you,
Sorry
Julie.
about that.
No worries, thanks.
So we'll have to make sure that that gets straightened out so it's available to people, but it seems like there'll be adequate time between the time we get that straightened out and any special session that would take place. So there'll be plenty of time to hear from the public. So is there any other committee discussion? Seeing none, so I guess we don't have to vote on anything today. We're just informational only at this point on this item. So are we ready to move on to our next agenda item on the work session on LD 2127? This is a bill that we've heard about in committee earlier this year. It's an act to support farmland preservation by allowing the siting of solar energy installations on land enrolled in the Farm and Open Space Tax Law Program. It's sponsored by Representative Barry, who I believe is also joined us on the Zoom meeting. And we have an amendment that he's offering on that bill that you should have in your folders. The amendment would change the bill to a resolve directing the Department of Agriculture, Conservation and Forestry to form a working group to study the impact of property taxes and other factors on the use of agricultural land that's enrolled in farm and open space law where solar energy installations are located, and to support and encourage such use. Julie, would you like to speak to us about this? I know you worked on this with Representative Barry. Do you have anything to add or present to us about this?
I think perhaps it would be best to talk to Senator Barry about that. I would also mention that you also have available signed on Nancy McBrady from the Department of Agriculture, Conservation and Forestry, who is available to speak to you this morning about the department's approach to this resolve. But I think probably Senator Barry is the best one to describe what he's looking for.
Okay, great. Yeah, Representative Barry, would you like to present to us your amendment and speak to us a little bit about that?
Sure. Can everyone hear me okay?
Yes, we can hear you.
Great. Well, thank you for making this work session possible. Obviously, no small feat, but I'm pleased to hear a really important conversation about conformity. LD 2127, as you recall, at the public hearing, had a lot of support from folks in the agriculture sector, in solar energy development, and in farmland conservation as well. One entity, the Maine Municipal Association, expressed some concerns. And as a former select board member in Bodenham, also a longtime teacher, I take those concerns about property taxes very seriously. So I worked with Kate Dufour at MMA, with the Department of Agriculture, Conservation, and Forestry, and through them with Maine Revenue Services, who I understand to be supportive of this approach, to put together a simple resolve that would direct the Agriculture, Conservation, and Forestry Department to convene a stakeholder group to include all of the entities that I just mentioned, or at least a representative of some of those groups that I mentioned. So Maine Revenue Services would be there. The Maine Municipal Association would be represented. Agriculture, conservation groups, renewable energy developers, and farmers or organizations representing farmers would all be included. And they would look at the fundamental objective underlying this proposal, which of course is to make it possible for farmers to keep farming. Many of them, are struggling or have struggled in the past, to hang on to the farm and to keep that farmland as farmland, which of course is beneficial to all of us for many reasons, and to keep the farm operations afloat as well, using solar as a helpmate. Solar energy, especially given some of the policies that my committee and your committee recently have enacted, really can be beneficial to the farming economy in pretty unique and powerful ways. But current use farmland law, a taxation law, could potentially really be a deal breaker for many of those opportunities, could prevent them from going forward. The goal here is to look at that problem, to consider possible paths forward, and to report back in April of 2021 to your committee and also to the ACF committee. And I think that's important because obviously this would be a stakeholder group led by ACF, working with Maine Revenue Services. I've been closely in touch with members of that committee, and I know Representative Kryzak is on both, which is fantastic. So the goal here is really to have that kind of cross-cutting collaboration. So the report back to both committees with enabling legislation by either committee as part of this resolve. I'm glad that ACF is represented and available to take questions from their point of view. Obviously, they would be doing the work. So I'll stop there, and I'm happy to try to answer any questions if you have any for me.
Great. Thank you, Representative Berry. Are there any questions from members of the committee about the amendment being presented by Representative Berry?
Mr. Chair?
Yes, Representative Kryzak.
I'm for the bill, and I am a farmer. And now that I've seen that they can set up solar so I could still have my livestock graze those fields. But I don't understand why we're talking about any kind of bill that's going to cause us to spend money when we're trying to get the economy back. I think this is something that should be pushed forward until the next legislation when we see where the economy is, and should only be talking about ways to fix the economy.
So Representative Berry, can you correct me if I'm wrong? This amendment wouldn't cost money. It's a resolve to get some stakeholders together to have some conversations to get the bill in good shape for the next session. Would there be any cost to the amendment if we amended the bill to just do what you're proposing?
It's my understanding that the stakeholder group would not involve any any additional resource needs for the departments. They could answer that better than I, but please do confirm that understanding with them. But obviously, if there's no fiscal note, there's no cost to the state general fund. I think the cost concerns raised by Maine Municipal Association are really an important part of what we need to explore here. Their concern has to do with potential revenue which they might receive if land were taken out of current use farmland protections. So that potential loss of future revenue is really the only money that is at stake here, and obviously that money comes out of the pockets of the farmers in some way. So really, we're trying to look at the bill a little more carefully to make sure that MMA's concerns have been carefully considered and hopefully addressed. I don't know if Kate Dufour is available, if she could comment, but I did speak with her. She felt that this was the right approach. She was the only person who actually expressed any concerns about the bill and was not full-throated supportive. So Maine Municipal Association does support this amendment. Ms. Dufour did express to me that she felt this could really lead to a win-win where the concerns of municipalities are addressed in a more surgical way, if you will. And I'm very hopeful that can be part of the outcome here. It was, I'm glad to hear Representative Kryzak supports the general concept. Honestly, I would love to see the bill just enacted as is, but I also, I think, this committee, for all the right reasons, has been very careful to consider the municipal perspective, and that's really the spirit of this resolve, this compromise resolve. It does not have a cost that I'm offering today.
Ms. McBrady, would you have anything to add? I see that you're on the meeting with us.
Yes, thank you. Good morning. My name is Nancy McBrady. I'm the Bureau Director for the Bureau of Agriculture, Food and Rural Resources. And yes, I can confirm that any costs associated with this resolve are going to be very minimal and can be absorbed by the department, by the Bureau. And we're very happy to play the role of bringing together the stakeholder group on this subject area.
Great. So it sounds like we've got confirmation there won't be any additional new cost to the state to do this. And I want to thank Representative Berry for all the work you've done and bringing this amendment to us. I think it makes sense to get the stakeholders together so we're in good shape come spring to hopefully take some action on this if we're able to do that. Is there any comments or questions from members of the committee about the amendment for Representative Berry or Ms. McBrady? Yes, go ahead, Representative Kryzak. Do you have anything?
I do, Mr. Chair. You're saying there's no new cost, but there will be cost, as you just heard, that will be absorbed by the department. In the times that we're in right now, where we're going to have to cut budgets, it seems to me we should not be voting to add new programs that are going to cost money that they say they can absorb when we don't know what committees can absorb based on the way the economy is now.
Representative Tippin.
Just in response to Representative Kryzak, I fully understand where he's coming from, and we've tried to trim down the agenda of this meeting to make sure we're focused on ways that we can help people get back on their feet and keep people who are on their feet there. To that aim, I've let a bill just go quietly into the discard pile, and a couple other sponsors have as well. But I do see the value in letting a department talk about how to best implement this and ask them to bring a bill to the next legislative session, which I think is what you said in your first comment. And that's all we're talking about here, is getting people in a room to find out the best way forward to help farmers use their land in a way that's economically viable and make sure they're getting fair tax treatment for those uses. So I don't know if there's a miscommunication here, but I think this is actually doing what you're asking to do, making sure that we're going into the next session where a bill will be considered then. All this is a task force with the departments involved and the organizations involved willing to participate.
Question, Mr. Chair?
Sure, go ahead, Representative Krajicek.
So Representative Tipping, what you're saying is we're discussing this now to put into the next legislature, so they should vote whether this committee should happen and look into this bill and this amendment, but it's not going to be something, should we go to an emergency session, that we're going to vote on this session. Is that correct?
No, I'm saying this committee would recommend to the this current legislature to convene this committee, which will have little or no cost, and so that the next legislature may act on those recommendations from it.
I mean, just to be clear, it sounds like we're talking about an amendment to a bill that would set up a resolve. Basically, there'd be no additional expense. In other words, there'd be no fiscal note on the bill. There would be a bill that we would vote on in a potential special session if that occurs, but it would not be a bill with a fiscal note.
No, I understand that. There is no fiscal note, but as you just heard from the department, there will be a cost and they're going to absorb it. My concern is when we have to start doing cutting because of not having all this tax money coming into the state, why are we looking towards adding to the cost of the department?
Well, I don't think we would be. I mean, they'd be doing it within existing resources, so there wouldn't be additional cost. There wouldn't be a fiscal note. There'd be no additional cost. And if we didn't do the bill, there wouldn't really be any savings. There'd be no additional money left on the table. That's my understanding. I saw your hand up, Ms. McBrady. Do you want to chime in? Do you have something to add?
Sure, I can just add a little bit of color here that we are certainly working within existing resources. We won't be obtaining any additional outside assistance. We do have staff within the Bureau that are working on solar issues. This is certainly within their wheelhouse to participate in. So really what we're talking about is staff time that is in a subject area that we're very interested in already. And in this current situation where all of our meetings are happening virtually, there's really no expense to that. So it's just going to be the time and effort for all of the stakeholders to meet. But I can assure you that there is not going to be any additional expense relative to purchasing outside assistance or anything to that degree. And I do believe this is something we want to do and can get done without any additional cost. So I apologize for making this a confused statement of mine.
So just to clarify, Ms. McBrady, it sounds like we're talking about some staff time from folks that are already working in the department, already being paid regardless. So if we don't pass the bill, it's not like we're going to lay somebody off or cut their hours for that amount of staff time for some savings to the state. So there's really no cost to this, it sounds like.
I don't believe so. Again, we do have staff that are doing this in their portfolio already.
Okay. Does that clarify your concern, Representative Krajicek?
Well, I understand what they're saying, but I guess what I'm trying to get across is why are we looking at new programs that, I mean, regardless of how you put it, it is going to cost some money. And if we're going to have to start cutting, why are we adding work to places that we may need to cut? I mean, we may need to cut the agriculture budget. We may need to cut, the revenue service budget. In order to get, the economy back going. So to add work to any department at this time just doesn't make sense to me.
So are you talking about like a bill that we'd pass next spring after this group meets? There would be some cost to the bill itself if we'd gone forward with the bill without the amendment, like that cost? Or are you talking about the cost to get a group of people together that are already currently working anyway, with a little bit of staff time that we wouldn't save any money if they weren't doing this? Is that what you're talking about?
No, what I'm talking about is why are we discussing any bill that is not an emergency to help us right now? I think, just with this coronavirus, we need to focus on that. And then once we get that back on track and the economy back on track, then we can talk about new programming, even if it only costs $1. I mean, that's where we're at with the budget from what we heard yesterday. the economy is bad. I mean, we're not getting the tax money. I mean, I run a special ed transportation business. I haven't bought gas for my 5 vehicles since March, so you haven't gotten that gas tax. That's just one part of it. If you look across, people aren't buying things, so you're not getting sales tax. So to even talk about new programming, no matter how valid it is or how needed it is, just doesn't make sense to me right now.
Representative Cloutier?
So I feel, thank you, Mr. Chair. I feel a little bit like the concern here is really around the original legislation showing up, should we be called back for a special session? And I guess I just want to add some clarity around that what I'm hearing is that the original legislation will not come before this legislature, the 129th legislature, even if we're called back into session. That what we're talking about here is an amendment that creates a resolve to create a task force to examine the legislation proposed by the original bill, but that bill will not show up again, if at all, until the 130th legislature in January.
Well, that bill would be amended with this language and would become a resolve. So it would show up in that sense, but it would only be just the resolve part of it that we would be taking up in a special session.
Right. I mean, I guess that's what I want to clarify is that the creation of the task force is the only thing that would show up during this legislature.
Right.
If that task force then recommended that the original bill be presented, then that would not happen until the next legislative session in January.
Right.
So I feel a little bit like we're talking about cost here, but I think that the real concern is about us addressing a bill that might show up during this legislature that actually will not show up during this legislature, would only show up during the 130th. And I think that the creation of the task force without a fiscal note allows us to be able to consider that legislation later in a way that we wouldn't be able to do if we just, kicked the can down the road and said, let's not look at this at all.
Right.
So I agree with the amendment. I think that the resolve and the creation of the task force is a good idea. And I think it sets us up to be able to consider something that would be valuable to the residents of Maine in January of 2021.
Right. Representative Tippin.
I hear the concerns that Representative Kryzak is throwing out there, but I also think it would be a very poor decision to completely freeze up and deny people who are struggling to keep their farm open that extra line, that extra lifeline. I think when we're talking about something that's not going to cost the state anything to figure out a good solution with all the stakeholders involved that will help farmers, that's a win-win. It's not going to help us at all to just stick our head in the sand and not consider any new ideas until next year. So I think it's important to continue this outside the box thinking, especially when it doesn't have a price tag attached to it. I understand the reaction to not want to start new programs, but to put it in perspective of some of the other task forces that this committee has created, most of which had Maine Municipal Association as a member, we're talking, maybe 2-3 meetings currently over Zoom. We're not talking about the establishment of a new grant program. We're not talking about, adding another line to any budget. We're simply talking about making sure that we have another economic development tool for farmers and that it's well thought out for the next legislature. So I think we should continue to work on ways to make people's lives easier and make it easier to have a small business in the state. This is one of those things that we can do right now. And I don't see why we oppose it just because it would require a few staff hours from a couple departments in the meantime.
Right. Yeah, I mean, I'd concur with that. I mean, this resolve just allows conversations to happen so that we can get ourselves in a better position to possibly take some action in the future on something that would help our farms, that would help rural Maine, giving them an additional source of revenue and developing solar so they can have an additional income stream from that. So, I mean, if we want to talk about helping our economy, this bill could lead to that in the future and allowing conversations to happen between now and next spring so that we're in a good position to launch something that will help our farmers, I think makes total sense. So Any additional comments from members of the committee? Questions, concerns? I don't see any in the room. Is there anybody online? Any comments or questions from the members participating online? Anybody would like to add anything else? So this bill is currently in the committee, so I guess we'd have to, if we're going to take action, we'd have to move to reconsider that bill, and then, no, we don't. Okay. We never voted on it. Okay, so the bill is in the committee. We haven't not voted on the bill. So we would, I guess, go into work session on the bill. We're in work session. Okay. So is there would anybody like to make a motion on this bill? Representative Terry.
I'd like to make a motion to pass the bill as amended, to start discussions to make this happen in the 130th.
So we have a motion by Representative Terry to amend LD 2127 using the language provided by Representative Barry to turn the bill into a resolve, and that's been seconded by Representative Matlack. Any additional committee discussion on this? Seeing none, and I don't see anybody online that wishes to speak on this. All those in favor of the motion, please signify by raising your hand. Oh, Julie.
Have to unmute me. Thank you. In order to vote, you have to have the clerk come down to the room to take a roll call vote.
Okay.
So I would guess that perhaps Karen Montel is your clerk for today. She's usually the clerk for Veterans and Legal Affairs, and I'm guessing that she may be on her way down even as I speak.
Okay, so we'll wait for Karen to show up.
Thank you. Sorry about that. Should have mentioned it sooner.
Mr. Chair.
Yes, Senator Sanborn.
Thanks. Julie, and is it accurate that we have to call our presiding officers to vote if we're remote?
Yes, members who are not in the building today, the voting procedure is either that if you are going to be you have 24 hours to vote. If you are going to be here in the next 24 hours, you can vote at Legislative Information Office, or the alternative is to call your presiding officer's office and vote that way remotely, as you would if it was at the end of session and you were not at the work session.
Okay, so our clerk is now here, so I guess we're ready to vote. So all those in favor of the motion, please signify by raising your hand. All those opposed? So of the members in the room, that appears to be unanimous. I know the members that are on by way of Zoom will have to have the presiding officers vote on your behalf. So the vote for now is, I guess, 7 of us in favor and none opposed. So that will conclude the work session on LD 2127. So I guess that concludes our business for today, unless there's anything else that anyone else would like to bring up or add. I don't see anything else, so I guess we'll adjourn the meeting of the Taxation Committee.
Thanks, everyone. Have a good one.
Sorry, Seth, I didn't mean to pick on you.
Oh yeah, for those still on, make sure to fill out your forms for those that are in the room. Fill out your expense reimbursement forms and sign and date those. Thank you.